Start the recording and make sure you guys can see. Looks like we got people watching the stream. All right. So, trade fusion class. We got a holiday today, market's closed. So, figured it would be a good time to jump into some stuff. I can see our Discord room now. So, if you guys have questions, just drop them there. And so, basically, one thing I really wanted to talk about was search and destroy, because we always mention it in the room, but it's kind of one thing I don't like is the weird names. So basically, I wanted to cover what it means so that if you're always like, what are they talking about, that you can follow along, because this has been a very consistent setup, and it's one of my favorites to look for, just because of how consistently it works out. So let's just start looking for them. Let's see. Last Friday on June 12th, this was a good one. So let's zoom in. And so basically, this is what I look for the first thing when I log in. And we'll do replay mode because, when we log in for the day, we don't know what we're going to get. So we'll kind of simulate that a little bit. But basically, the first thing I do when I log in is look for what is the overnight high and overnight low. And then let's see. So you guys know I always am watching a 5-minute chart with this 20 EMA. That's a lesson from Al Brooks. Let's just double check this is set up the way I want it. Yeah, 20 EMA on a 5-minute chart. So nothing really fancy there, and that's just an Al Brooks lesson. So let's say, we'll get this going a little bit here, but I'm in California time, so we'll let this play out. So here, we'll go a little further. Here we go. So this is when I'm probably about to be getting into looking at the chart. And so first thing I'm going to do is mark up overnight high overnight lows and overnight highs. So the reason for that, and you guys will hear me say, we have options traders, we have futures traders in our room, but for me, whether you're trading options or futures, I'm always going to be watching a futures chart, because you can set your stop. It's all based on that exact price level, versus like if you're watching SPX, everyone's trading SPX with options, so it's going to be less. We use gamma exposure, which we can maybe get into that a little bit, but it's going to be less based on an exact point on the chart versus, NASDAQ. So when I'm doing this markup overnight high, overnight low, the way I'm thinking about it is there are bears who set their stops up here. And this is especially notable in this example because they came so close to this prior high, but they didn't actually touch it, which means we know that there's a break-even stop for this bear sitting right there. That's still intact. And then bulls, there was a bull who decided this was a good place to buy in the overnight session, and they have a break-even stop sitting there. So to me, both of those levels become targets, and there's no actionable trading setup until one of those areas is hit. But coming into the day, I'm thinking, you guys will hear me say, so depending on which way we go first, look for a trade in the other direction, because we have these two key levels set up. So we'll start to let it play out. So we open. So here's New York open right here at 9:30 a.m. And we immediately go to take this level and then push back above it. So Really important thing with this setup, because you'll start to see levels and then think, okay, well, I learned this setup now. And so every time I see it run a key high or a key low, I'm just going to take a trade in the other direction. That's not what we want to be doing. What we're doing here is waiting for some kind of confirmation that they are going to flip it and run it back the other way. And we get that confirmation by closes. I always watch the 5 minute. So that for me is just it helps with avoiding over trading, because you got to wait the full 5 minute candle to close to give that signal. So you might miss a tiny bit on an entry, but I'd rather just give it an extra couple minutes to get that confirmation. So when I'm seeing on the 5 minute, this is 15 minutes of price action here. When I'm seeing this, that's telling me, okay, this is going to be a long and I'm going to be targeting up here. So as soon as I start seeing, these two candles here, we've got 25 minutes of price action at that point in the day. That's where I'm looking for that long to go for the other end. One thing that's notable here is I am watching ES and the NASDAQ. This one was really good on ES to have them both up. This was last Friday. Where is that? Oops. Here we go. Friday, June 12th. So, here's the NASDAQ. We just covered this setup in detail, that we came into the day saying, okay, here's overnight low, here's overnight high. Which side do we take first and then target the other? What's notable here, we'll jump to ES. ES had the same thing on looking at June 12th. Let's see. Is it going to zoom in for us? No. There it is. So June 12th on ES, overnight high, overnight low. This was what we were looking at. We posted this one. We covered this. So here's kind of adding ICT concepts, which I kind of do a little bit less with fair value gaps. I prefer to just watch where stops are sitting. So here, this downside, this would be like if you're being super patient, wanting that extra confirmation. The true confirmation is we hit the key level, we make a fair value gap moving away from it, which would be this one on the 5 minute, and then we retest it and hold. Yeah, so how do you decide to hold on? I mean, for me, I've watched this setup so many times that I'm confident enough in it to stay, and to look for it. But it could be, if you find yourself you're just jumping out, then I would look at your position sizing, because sometimes that's what can get in our heads. I mean, this was to go from low to high, to capture, say you're waiting for confirmation and you get in somewhere in this area, whether it's based on the fair value gap or based on a strong 5 minute green candle. That's still what is that, 35 plus another 13 on ES. So catching that many points on ES, that's a monster move. And if your position is shaking you out, then I would be looking at position sizing, maybe taking the micros or something like that. But let's look at a couple more examples, because there were a couple. There was one from this week that was pretty notable. I think it was on the 16th. And this is going to be an important reason why we have the NASDAQ and the ES up at the same time. Let's see. Okay. Here we go. Let's see. Was it the 17th? Yeah, so we'll do the 17th. Let's see. Okay, so June 17th, we're coming into the day. And we're looking for the same setup that we've been talking about right now. And we see overnight low, overnight high. We've got New York opened 30 minutes ago. We're pulling back. And so we're thinking, okay, if this hits this low, then I'm going to be looking for a long, right? To target the highs. So there we hit this low. And so we're thinking, okay, well, now overnight high is hanging out there. And so this was one where you guys heard me on voice kind of questioning it. And the reason being, if we jump back over here to ES, let's see. Was it the 17th? No, I'm sorry. It was the 16th. Let's see. Okay, so let's try that again. All right. My bad. 16th, markup overnight high, markup overnight low, replay. Hopefully this is still helpful. New York open. Okay, same deal. It was the 16th. So NASDAQ hits overnight low, stops out the bulls that bought that low by a couple ticks. And so we're thinking, okay, close back above. Is this going to be a long? Now we only have 10 minutes of price action at that point. So for me, I don't, I know GB traders the same way. I don't really like to take trades in that first 30 minutes unless it's like some perfect setup. But for me, I'm just kind of waiting. I want more information at this point. And what was really tough on this one is that when we jump back over here to ES, at the same time of day, ES had done the exact opposite, which was hit the overnight high, and then that had me looking for the lows. So it's like when you have conflicting information that way, it's, the setup is basically invalidated because they're doing the exact opposite. So that's kind of like a wait for more information because we're watching both the NASDAQ and the ES. And on this day, on this down candle here, I hit puts saying we were looking for overnight lows. And then so we had to take some heat on that. We took SPY puts that day. So we had to take some heat on that pullback. And then those paid pretty good when we hit overnight lows. So I'm sharing this one because I think sometimes, especially if the setup is new for you, we get in this mindset of like, oh man, like I learned this new setup and I'm going to go find it and I'm going to hit it as soon as I find it. And I think it's important to just be looking, it's not jumping in as soon as we hit overnight high to flip the other direction. Um, it's, kind of taking some of that to be a little bit cautious. Um, let's find there on some of those down days there were some good ones, and then we'll start looking at something else. Let's see. We're back into May. I think this was a good. Let's see. Yeah, here this. Let's do this day. So here you guys will hear me say I'm looking over also at like prior day highs and lows. So this was a good one for that. All right. So we come into the day on June 8th. And in this case, I would have pulled up my chart and um so this is basically me getting ready for the trading day, and this is the first thing I would have done. Mark up overnight low and see where's the key. We're at overnight highs already, so there's nothing, so then I'm thinking, okay, what's the next key high next to us? So which is going to be the prior day high. So just mark that up, and then we start to let this play out. So we got the New York Open, big push, and then here is where we're thinking, okay, we were even watching options flow and seeing, okay, they're blasting calls right here on this candle, but in our heads, when we see this, uh, we're still in wait and see mode. We don't like taking trades in that first 30 minutes. And we're thinking, we see this overnight low hanging out. We see basically there was a bear that sold high a day yesterday who still had a piece at a break even stop sitting there. And we're thinking, okay, so I'm going to wait for more information. And then we see, bam, that. So for me at this point, this was game on to go short. You even had that fair value gap left on the 5 minutes right there. Small one, but um, you guys will hear me say, okay, 5 minute candle close on its low. So that's like this one right there. And that's Al Brooks. That's just a sign of strength. And so the way Al Brooks would do it, so okay, our setup is we stopped out these bears. Now we're targeting this low. The way Al Brooks would do it is if we're looking for these candles that are a sign of strength that close in one direction with no wick or a small one, then they're setting limit orders to get in that direction of the trade at the end of that candle. Meaning, so like say if bulls would be putting limit orders so that they would get long if we broke above this, which we never did. So that order would get canceled out. And then bears would be, setting limit orders on the bottom of this down candle to get short, which would have paid. And then, if we play this out, that's this, even through this consolidation here, we're looking for overnight low. So that would have been a good trade. Um, So just kind of another good example of, looking for that. We're looking for where stops would be sitting, and then looking for closes past that level to take a trade in the other direction. So we call it, we call it search and destroy, but I like to use it on overnight highs and overnight lows, and then key highs and lows on the daily. Um, and I think, let's see, was this? So that was June 9th. June 8th. Let's see. Yeah, June 8th, I think, was a search and destroy short too. because New York Open went and took this high and then just melted down the whole day. Um, so there's a lot of good examples of this one, but basically, yeah, what we're looking for is a clean move through a key level, and then signs that they're going to run it back the other way, and we'll take this trade um, both to the downside and to the upside, um, and it's just a good repeating pattern. Um, are you guys good on that one? Do we want any more examples, or we want to take a look at something else? Let's see. A couple people typing. Give them a minute. Okay. Yeah. So that's really just like you guys hanging out in the room with us. If you hear us start saying search and destroy, so you're thinking, okay, I'm looking for key levels and I'm looking for signs that once we hit those, there that it reverses. And for me, those key levels are almost always going to be overnight high and low, daily high and low. Those are the most, when you guys see me, if I'm posting a chart in the room, um, those are, or when you guys say, oh, do you have a target? Those are what I'm looking for. Um, so like as we were if we're getting set up to come into the new week, this is what I would be doing. These points, because in this range, this is where they have stops. Yeah, new day or new week opening gap. Those are good to watch as well. Um, we were talking coming into this week about the new week gap. You can see that definitely had something. Basically, that's what FOMC went to go fill. So those are good to have on your chart as well. And there's always the saying, gaps often get filled. Um, you know, to say, oh, within the week, that's kind of a stretch. I mean, some gaps don't get filled. Um, you know, um, we could get into individual tickers probably for better examples of that. How's Lululemon doing, right? Um, got some daily gaps that, you know, that that's not getting filled anytime soon, right? Um, gap back up to 320. Um, indices obviously going to be different, but yeah, those are good to have on your chart. I think like if we take this FOMC one, um, depending on your time frame, it's like here's FOMC. If you're watching if you're a scalper and you say, "Oh, FOMC just happened and we hit the new week gap. I'm ready to go long." You still would have experienced almost a 30-point drop or more, right? So, um, I think it's good to be aware of those, but like, uh, you know, maybe as if we were kind of looking at that on FOMC day as a target, but not necessarily as a spot where it would flip to a long, if that makes sense. Um, good on that. Let's see. So the other thing I was going to talk about was darkpool. Um, I use darkpool a lot in my trading, and I think it's something that's easy to get overcomplicated. So why don't we cover a couple of those? Um, this should look familiar. The sheet that I post. Hopefully this is coming through. Um, so I have I post this each day in our Discord darkpool room. And then I also have this sheet as like an archive for each day. And let's see, the ones that I wanted to look on, because I did a stop out on snow and CRM. This was the day that, so June 11th. If we can, we'll zoom in here. They hit snow and CRM. And so for the past, that was, so what, 7 days or so, I had those lines marked on the chart and watched both snow and CRM. And so, just being honest, stopping, sometimes stop out, but I think important to show how these levels work, kind of what we're looking for, and how darkpool works. So basically, it's something easy to get overcomplicated, as we said, but I post those levels and I post a little flag to show has unusual size. So basically, if you see that and you see it's a ticker that you like to trade, you're just marking that level on the chart and watching to see what happens with it. So CRM, they hit it at 166.45. And this is exactly how I do it. I'll put myself a note right here that says June 11, 2026. And I'll leave this on the chart because sometimes years will go by and this will come back to be in play. And then snow was 239.90. And it was 18% on, June 11th. Now, let's see. So the thing with darkpool, and I could have taken a page out of my own book on snow, is just giving it a couple chances to show you, what is it going to be, support or resistance. That's really all we're looking for with the darkpool. Is it going to work as support or resistance? Step one is finding a big dark pool on a ticker you like to trade. Step two is waiting for it to show you. So these came in June 11th. So that's right here and all the way back here on snow. And so you could see it took how, really the good move didn't happen until June 17th to confirm. So, I think in here is when I started hitting puts on snow. And then these spikes above the dark pool kind of faked me out. Versus, if I just sat in it, obviously we had some help from FOMC, but FOMC would have been in here. We had the 237.50 puts, and then there would have been 17 in the money if I just sat in it. But CRM was really clean because it's like, okay, dark pool comes in here. This next whole day, it's kind of consolidating under it. It makes one good attempt to pop. So pretty much through all of this, like even through here, I would have done nothing to just wait for a clean signal. And then this would have been really the day to nail it when it went the open went exactly to the dark pool. And then couldn't get above it and sold the rest of the day. So I think I wanted to highlight these examples based on the fact that just because, it's easy to be like, oh, I found a dark pool, I'm going to immediately jump in and get in a trade with what I'm seeing. I think it's important to wait for that additional confirmation. Like this right here would have been the go signal for me when it went right to it and then dropped the rest of the day. I think we had one like that on Meta. Let's see. I'll try and find. Yeah, let's check out this one from June 10th, 18%, 574.88. Let's see, June 10th. $574.88. Right, let's see. So came in on June 10th, and then resistance the whole next day, and then June 12th, New York Open, immediate drop, another chance, couldn't get there, short. So either of these could have been a short off that meta dark pool. Then come to June 15th. Once it got above it, nice long. So giving signals in both directions. Good example of it's like, okay, rejected, sell, rejected below it, sell, and then once we get above it and it's got the EMA there, I think solid run in both directions and then leaving it on the chart. So kind of interesting. We know now there's a lot of money sitting on this one, so this could be good moving forward to kind of keep an eye on it as well. But yeah, that's kind of what I'm really looking for, is like just a clean move to go right to the level like this one and then sell. That would have been a good 14-point move. Yeah, so darkpool, I don't really consider it like a magnet, just looking at it as support and resistance. The percentage means percentage of average volume in 30 days. So, and I think I marked that here on my sheet. Oh no, it just says percent of average. Yeah, so it's average. So this is Friday, which was OPEX, which we talk a lot in the room about how OPEX is always a lot of dark pool. So the percent means of the volume a ticker gets over the course of 30 days. We see one transaction at one particular price level that has X percent of the volume over the course of 30 days. So for me, I've been looking at these amounts for years at this point. So I can tell you, and that's why I put those flags, that when we see Roku has news going on, but that is unusual. What CRM, 85% of what it gets in 30 days hit on OPEX Friday on one particular price level. That's unusual, and that's a line I would have on my chart. CoreWeave, 54% of the volume it gets in 30 days hit on one particular price level. That's unusual. NVIDIA. NVIDIA almost never gets dark pool, and not really ones with size. And then on Friday, it gets 29%. So that's that's unusual. And so that's kind of, I put that little size thing, and then I'll put a thing in the chat for you guys to let you know which ones I'm watching. But yeah, it's literally just watching to see if it's support or resistance, and then I look for unusual size, like and OPEX, so like end of a quarter, There's going to be a lot of dark pool, just rebalancing, repositioning portfolios. But I mean, these are lines I'll have on the chart for literally years. We've been talking about meta in the room. You see, I'm already, this is the layout I use more for trading, so I have lines on it, but you can see I already marked up NVIDIA. Meta, this 585.41, we saw more activity this past week at that price level. And then, all right, iPatch, take it easy. This was from OPEX 2024, and then they basically hit it again this week. So I just increased this percentage and didn't change the date. But like you can see, I have these lines on the chart since for almost a year or more. So when it's something big like that, because I think at December OPEX it was 85%, and then we were watching Meta the other day, and it's like, okay, at first here I'm thinking, oh man, maybe we're getting a bounce, and then it's like, boom, close below. This would have been money. Once it, this would have been like Al Brooks 5-minute candle close on its low, and it's below the dark pool. You could get chase puts anywhere in there. That's good money. Brokers questions, probably get into that more in the chat. Let's see. Yeah, those were kind of the big things I wanted to cover with darkpool and chart setups. Let's do one more thing and just talk about SQQQ from yesterday, because this actually helped us out a bunch. So SQQQ, they hit it. What was it? 37.59. So this dark pool came in on SQQQ yesterday on the open, and we talked about right out of the gates how this was going to be a focus. And so let's see here. Here's New York Open. New York Open on the NASDAQ. We're kind of whipping around. It was pretty choppy open, but we were waiting for this SQQQ dark pool to give us a signal. And then we kind of kept it in focus. And what's notable here is this is 0.17% versus, we're talking about, oh my end, NVIDIA 30%. This is 0.17%. But have been watching these dark pools long enough to know that 0.17% is enough to give us a signal on the entire NASDAQ. And so basically, once we're waiting. So in here, this is 15 minutes of price action. We see SQQQ above this dark pool. Go down to a 5-minute. You guys heard me on voice here. 20 minutes of price action. I see this bounce back over the dark pool. I'm thinking, man, today might be a shorting day. We got over this. I'm going to wait. We had data at the top of the hour. We're only 25 minutes in. And then as soon as this candle closed back below the dark pool, we said, okay, it's a long. And let's see. So that was, let's see, in here. Right, this candle closed right at the top of the hour. So that's we make this move. We get the 20. We made a new high a day, and then basically it was, each time we tried to check this dark pool was by the dip. So 1 hour of price action. This wasn't like the cleanest day, but just using this dark pool as another good example of, okay, each time, we tested it, even like this, oh man, the things are looking pretty nasty. There's a big sell. That was another good dip buy. And that's still couldn't get back over this dark pool. So I think, just another good example of all that is using it as support and resistance. SQQQ is really good for it. TZA is really good for it. I'm starting to run out of gas here, but there was a good example on TZA from a couple weeks ago. Maybe I can just post those in the Discord a little bit later. But I think I'm going to wrap it up here. If you guys have questions or want to get into it in the Discord chat, I'm happy to do that. But I appreciate you guys taking time. I'm going to post this as a recording on YouTube. You can watch it. If I didn't cover something, just put it in the chat, and I'll, day off today, so I can pop in and we can talk more, do some screenshots. But thank you guys. Appreciate you hanging out with us, and I will catch you soon. Thanks, everybody.